Coming off a significant week for gold and silver, there's a whirlwind of activity on those price charts. It's easy to get lost in the big numbers, but we're aiming to shift focus. In this discussion, we'll delve into gold, possibly touching on silver too. However, we won't solely focus on the price spikes. Instead, we'll explore various unrelated facets like sales tax, capital gains taxes, deficit spending, and the demographics of gold buyers. While these topics may not seem as riveting individually, piecing them together paints a much more intriguing, perhaps even alarming, picture than just tracking price movements. Let's delve into the U.S. federal budget deficit of 2023. Last year, the United States faced a staggering deficit of $1.7 trillion, equivalent to 6.3% of the nation's GDP. This figure marks the highest deficit since the 2008 global financial crisis. It's worth noting that a deficit of 6.3% of GDP typically accompanies significant recessions, which wasn't the case in 2023, at least not to our knowledge. What's even more concerning is that this annual budget deficit is projected to worsen, with the Congressional Budget Office forecasting a rise to $2.6 trillion by 2034. This forecast is particularly alarming given the current scenario. Tax cuts, increased spending, and rising interest rates, all contributing to the mounting debt burden. While I'm not suggesting doomsday scenarios, the current U.S. debt stands at $34.5 trillion, a staggering $11 trillion increase from just a few years ago in March 2020. The trajectory indicates a worsening situation. Let's classify this sobering data as does not scale, and circle back to it later. Shifting gears, let's discuss state and federal legislation concerning sales and income tax on precious metals. Perhaps you've heard about Kentucky's commendable move, becoming the 45th state to eliminate sales tax on gold and silver, an applaudable step forward. So, what about taxes upon selling? Well, Nebraska and Alabama recently joined as the 12th and 13th states to scrap income tax on gold and silver. This means no capital gains tax if you decide to sell, provided you haven't tragically lost them in a boating accident. However, at the federal level, the discussion becomes more complex. While federal laws regarding gold and silver as collectibles remain unchanged, there's renewed attention on making certain precious metals tax-neutral, led by U.S. Representative Alex Mooney reintroducing a bill. Achieving this neutrality will require substantial effort. As a side note, the debate often involves coins from the U.S. Mint, which carry legal tender value, potentially easing the path to tax neutrality. This adds another reason to consider holding coins from your home country. Shifting gears, let's discuss a study by State Street comparing gold ownership across generations. Unfortunately, Gen Zers like us weren't included. However, it's intriguing to note that millennials allocate a hefty 17% of their portfolios to gold, compared to boomers' 10%. This statistic garnered significant attention across financial platforms, though it warrants a closer examination of the study's methodology, which seems somewhat dubious upon scrutiny. Now, a gold ETF conducted an online survey among 1,000 individuals with $250,000 or more in investments. Among the respondents, 25% were millennials. So, we're talking about 250 out of the 72.24 million millennials in the United States claiming to allocate 17% of their portfolio to gold. It's a minuscule sample size, yet it garnered significant attention. However, we can delve into this study while acknowledging that gold is no longer solely associated with older generations. So, the interest in gold isn't limited to older demographics. Now, are all these pieces of news unrelated? Consider the trends in gold and silver. Silver, being more of a commodity than a hedge, follows a different trajectory. We're witnessing heightened gold demand, especially from Eastern countries, with central banks purchasing 34% of global gold production in 2023. Notably, China is strategically converting its reserve dollars to gold. Couple this with the movement to remove sales and income tax on precious metals, and the growing interest among younger retail investors in these assets. All these factors are crucial to consider. Examining the charts, gold has surged by 33% since the rally commenced in October, while silver experienced a recent spike, further enhancing its appeal. However, determining whether investing in these metals is prudent necessitates considering these broader factors. When we synthesize all these elements, it becomes evident that incorporating gold as a hedge makes sense in the current climate and is poised to gain even more relevance in the future. And if you'd like, you can also include silver in that discussion. As for potential reasons for a significant drop in the price of gold, I can only think of one: if the US were to sell off its own holdings. However, such an action could have numerous negative implications, which we'll need to delve into in another video. So, to wrap up, I wanted to share some price forecasts from analysts regarding gold and silver. While many are making familiar predictions, I stumbled upon an updated forecast from economist Jim Rickards. He suggests that gold could reach $2,700 by 2026. Initially, this seemed conservative, until I realized he had an extra zero in the figure. His analysis factors in how much gold would need to be valued at to cover the current money supply, similar to a gold standard as seen between 1913 and 1946. While the idea of reverting to a gold standard may seem improbable, the other factors discussed in this video indicate solid fundamentals for ongoing growth. So perhaps Jim's prediction of $227,000 per ounce for gold will turn out to be correct, and I might end up being mistaken. However, regardless of the outcome, the notion of having some gold in your portfolio seems prudent. Let's leave it at that. Share your thoughts with us. Are you still considering buying gold amid the current price surge? And what about silver? It's certainly an exciting time for these assets. After all, it took 11 years to climb back to $3,150. I'm intrigued to see where it heads next. If you found this message compelling, please share your thoughts in the comments below. If you enjoyed this video, be sure to give it a thumbs up, subscribe to our channel, and turn on post notifications for more thought-provoking content. Thank you for watching.